Hi guys, and welcome back to Quarantine Investors. Today I'm going to go through some brokerage trade platform tips, which I think should bring some decent value to any beginner investors or even investors who have been investing for a while. If you haven't started investing, even if you don't have a lot of money, I strongly encourage you to get involved in the markets and take advantage of time. Time is your friend, and when it comes to investing, it's really important and can really grow your wealth over time. So I'm going to get into and go over a few of these tips, which I think will apply even if you're not using the same brokerage. There's a bunch of different brokerages you could be using. A lot now you can even get set up online. You got Wealthsimple, Robinhood. There's a bunch of different options. So I'm going to go into some pros and cons as to why I choose to use my financial institution over some of these other brokerage options. So for some pros, I found I had access to more stocks than some of the smaller brokerages. Provide research and analysis, which can be helpful. I do a lot of that on my own, but to have those tabs there where I can go into and research further and get different analysis on some of the stocks that I was looking at is a pretty helpful tool. It's really user friendly, has guides built in which show you how to use different functions. One of the biggest and most important things is there's no market delay or very minimal or non-noticeable market delay. Some of these other brokerages have, a 15-minute market delay, which, I mean, if you're day trading, that's huge. If you're investing, it can make a difference with your purchases too. Like you could be making a purchase where 15 minutes delay is going to affect what you would have purchased at and your price points and whatnot. So the timeliness processing is huge. I've found with my financial institution brokerages, the processing is really quick and efficient. They just recently started offering GICs and mutual funds that can be done through the brokerages. I don't really use any of that, nor will I probably ever use any of that again. But for some people, it's a helpful tool. I mean, in the past, you'd have to go into the bank and get set up with those, and it's kind of a pain. Now it's pretty readily accessible. TFSA management, I feel, is more controllable in terms of your contribution limits, transfers you can do right away. Even moving stocks from a non-TFSA account into a TFSA account when it comes January and you get that increase in your contribution limit, I found that's like a really helpful thing for me. So like for a lot of these reasons, it just makes sense for me to just stick with my financial institution brokerages. The customer support is obviously really good. Got more difficult during the last year, obviously, because like everything kind of got out of control. But platform reliability is huge, and that's there with a lot of these financial institution brokerages. The cons, there is some. You pay relatively high fees with some of these brokers. Like mine is $10 per trade, which if you're doing a certain number of trades per month, it actually goes down. But for most of my trades, it doesn't really matter because they're going to be fluctuating that amount of money pretty much almost instantly. If you're trading smaller amounts, maybe that's where you kind of want to say, do I go to one of these other no trade fee brokerages? Or one of the things about that is though, like reliability and customer support and stuff. I know some of them have had some issues. They're getting better, I guess, the larger they get, but it really comes down to personal preference. Either is fine, and based on your situation. I mean, if you don't have a lot of money to begin with, you can't really afford to be paying $10 per trade. If you're trading, if you're investing, it's not really going to be huge because you're just buying and holding. So I'm going to share my screen over to my brokerage's buy and sell option. Hopefully it'll help you get a clear idea of how to go about this process and do it more efficiently and not make some mistakes where you flush money down the toilet. So let's head over here. So and here we have your symbol name. So this is the stock. So I put in this is a stock I just recently bought, Tattooed Chef. The ticker symbol is TTCF. This first part, the US, it's a US stock. You want to make sure this ticker symbol is right. You do not want to be buying the wrong stock. And although that sounds stupid, people do it all the time. I know friends and family who have bought the wrong stocks. I mean, we had that huge incident. We've had a few incidents now, but like last year, Elon told his followers to go switch to Signal app over WhatsApp, and some other company named Signal that has nothing to do with, social media went up like 6,350% or something crazy like that because everyone was just buying it. The wrong ticker symbol. So you want to make sure that ticker symbol is right. These are the first two things you want to do. The second is make sure you're in the right account. I don't have it up here because it shows all my account information, but I can't tell you how frustrating it is if you're in the wrong account and you purchase, let's say you're in your Canadian account and you purchase a US stock. You're now having to pay the conversion fees and the foreign purchase fee, and you just get dinged, and you don't want to have that happen. And it seems stupid, but I've had it happen at least 4 times, and it's cost me a lot of money just switching the stuff over because you're getting the wrong currency stock in that account. And let's say you wanted to purchase a stock in your TFSA account and now it's in your regular account. And let's say you wanted to look to make a trade and then sell it and take the profit. Now you're dealing with taxes and other stuff, or foreign currency, and you pay the currency conversion fee. Then you have to pay the foreign currency conversion rate, and you end up with like a different amount or a different cost basis for your stock than you originally purchased it at. And that can be really frustrating. So don't let that happen to you. I have to keep reiterating it to myself, even because you end up getting tied up with the numbers here, because when you're purchasing a stock, you're going to be looking at, I want to purchase set amount of shares at whatever cost, and you're looking at the price, and the price is going to fluctuate based on the market. And if you're trying to get these orders in, you just don't think about the account, which account you're in. So if you have more than one account, make sure to do that. Make sure to check the ticker symbol. Those two things, please do those first. In terms of orders, you got like your market order, your limit, stop, and this goes down: trailing, stop limits, trailing, stop, market. Basically, I'd be focusing more on market and limit. Definitely just limit if you're starting off. Because this way you're getting the stock at whatever price you put in to limit it to. So you're not going to end up paying more money than you have calculated to spend on that stock. There's another option, which is the all or none. I never really use that when you're purchasing. It's just if you're purchasing set number of shares, it either fills all of them or none of them. So for this instance, let's look at limit. We're going to be purchasing, let's say, $1,000 worth of Tattooed Chef. So the price right now at 2:55 p.m. is $19.83. So that's what one share of Tattooed Chef would cost you to buy. So if you want to buy, say, $1,000 worth of this company, you're going to go $1,000 divided by 1983, and it's giving you 50 shares, 50.4. But you on this brokerages, we can't do like fractional shares like some of these other smaller brokerages. So we want to buy 50 shares at the limit price of 1983. Then we put, this is your good till. You could specify, or you just want to do the day here. So your password and then preview order. But before we send in this order, this is trading at this price. So if we put in at this price, we want to buy 50 shares. It might not fill. If this price starts going up, we won't fill this order. If it goes down one, let's say to 1982, this order will fill. This 50 shares will likely fill because of the volume and everything. It's going to fill. If we're refreshing this constantly, we're going to want to put one above just because we want to offer more than the current price so that it fills immediately, if that's what we want to do. If we wanted to get it at exactly that price, you could put it in and like the day fluctuations are going to change this amount. And eventually if it goes to 1984, or sorry, 1982, someone's going to sell you these 50 shares for 1 cent above that. But before we send this off, what I like to do always is to hit the refresh button. And I do this because if you're in this option here and you're looking at this, I mean, if you pull up a separate screen, some people do, they have the chart up and whatnot. But I usually go into this screen, hit the refresh, I check the price, what it's at, how many shares I want to buy based on how much money I have to spend on that stock. Make sure these numbers line up right, make sure your account and your ticker symbol is right. A tool I use sometimes is the bid and ask, which is essentially the bid, which is what people are offering for the stock. So they're saying, I'll buy 1 share at 1982, and this is what people are saying, I'll sell 1 share at 1985. If you're refreshing this, sometimes the spread of these numbers is a lot bigger. And if you're noticing like the bid starting to climb higher, like usually it reflects in the price and that'll go up. And you can, based on the difference between these numbers, you can kind of see and get an idea of the direction. And sometimes you're able to use these to get a better price on your stock. At least I have in the past, and I find it, it's not always 100% accurate. Like if this one's going up, it's going to change this price up this way, but more often than not, it's benefited me to get a better deal on my stock. You also want to keep an eye on the volume for stocks is when you're purchasing, because if this volume on the stock is low, sometimes it takes a while or longer for you to fill these orders. Usually you're not going to be buying stocks with low volume, but in the past I've bought stocks before, or even some stocks get like just not as attractive anymore, or like they lose volume as they're not really in the spotlight. Like I bought Molson Coors before and it had lost a lot of volume. And when I went to go sell it, there wasn't much volume there and it took a while for me to sell the stock. So high volume's good. You can make trades quicker, more effectively. What else do we got here? Quantities. So if you're purchasing these stocks, you don't want to be buying, I mean, you could, but it makes it more difficult to fill. If you're putting like 53, for instance, you don't want to be putting that 3 in there, just that extra 3 shares, because you might fill the 50 and then you're sitting with a 3 trying to fill three damn shares that isn't going to fill because people are selling in like bulk or quantity or increments. So what you want to try to do is keep it even based on whatever you have to spend. So 100, 200, 10, 20. You don't want to be doing like, your 27 or your 254 or your 187. You don't want to be doing these random increment shares because you're going to get partial fills. And it's just like, it's easier to fill just like these even incremental quantities. And also with, like there's a lot of different factors at play that are going to affect this price. So remember to keep this refresh button going. You always want to hit it and make sure everything's good before you submit your order. Buying aftermarket and pre-market, you for sure want to use limit order, because if you're using market and this price is fluctuating like crazy, you're going to buy it at whatever. If it's climbing, if you put in 500 shares at market price, it's going to be buying it at whatever the market. And if it's fluctuating a lot, it's going to keep buying incrementally up, or it'll buy them all at whatever price it is. And you can get a pretty big spread in whatever you were hoping to get, and it could cost you a lot more than that. So safer just to go with the limit. You know what you're spending, you know what you're getting. Definitely if you're doing after hours or pre-market, use a limit. It can save you getting rinsed on buying things for way more than you expected. So thanks guys for checking out the video. Next video, I'm going to try to get into some of the metrics that I use for calculating what are good stocks to be purchasing for myself, and other useful tips. So check out the Discord, drop me a like and subscribe if you found any of this stuff useful, and I'll catch you guys around in the next video. Thanks. See ya.